Anas Alhajji.
Good morning.
My trading warrior brother. Happy New Year, buddy.
Good morning. Happy New Year to you.
I appreciate you coming
and the
in.
team.
Thank you. I appreciate you coming in. Are you going to be showing anything, Anas?
No.
Okay, well, I'll share. Yeah, I'm gonna, so we could put up WTI and talk about it. So, all right, why don't you give us a quick recap of what you thought the biggest developments were last year leading into this year? And, you have become famous for your expression that OPEC doesn't manipulate oil markets, they manage them. So they were pretty well managed last year when you think about the kind of run we had, because we didn't peak until, this fall. So 2021 was a well-managed market. You had some pullbacks, but, overall uptrend. So how were they successful in doing this?
Sure. I will focus on that. I just want to reference something we discussed, I think, a year earlier from now, which was no $100 oil in 2021, if you recall.
I recall. Yes.
Yes. So that was another one. And when people talk about the most important development or developments in 2021, they usually bring the knowns. But really, what we know is not the most important development. It's not it's the things that are not expected. So it's not the demand recovery. It's not the increase in production to meet demand. It's not the rise in oil prices. All of this was expected. It is not Biden's request from OPEC to increase production, and not the release of oil from the SPR. I know that some people in the media may be interested in these issues, but these are not the most important development. Historically, US presidents asked OPEC to increase production. Historically, US presidents used the strategic petroleum reserves, the SPR. Then what are really the most important ones? When we talk about the most important ones and why we focus on them, because they are unique in different ways. We are talking about events that are not predicted, events that are not that common, events that are unlike anything in the past, and they have and they are even different from conventional wisdom, and they have significant impact on the markets today and the future. And with that, everything people talk about basically are the symptoms. When we talk about increasing prices, when we talk about increasing demand, these are really the symptoms. So what are the most important events? In my view, the most important events are the development within the development of thinking within OPEC Plus. We have two issues here regarding this. The first one is, it's not really the market management per se. It is the refusal of the large oil producing countries with spare capacity to compensate for members who cannot meet their quota. Because one of the problems in OPEC historically, before OPEC Plus, was when countries couldn't meet their quota, other countries infringed on their market share and increased production and took over. And that always created a friction within OPEC. So that's no longer the case now. Those countries are respecting their quota, and they are respecting others' quota.
Why? Why now? After all,
well, now that's the new thinking. This is going to affect market structure. This is going to affect everything related to OPEC behavior, simply to keep the unity of OPEC Plus. You have 23 countries together. They work really hard to achieve what they achieve, and they don't want to break it like they did in the past, because this was one of the mistakes of OPEC within a period of about 25 years. where
Well, I mean, if they're that tight in us, why is Saudi putting in missile bases and testing, ballistic missiles?
well, in a sense, that's a completely different issue related to the security of the country and security of the oil fields. But the idea here is
Okay.
not infringing on the market share of others is really one of the most important development in 2021. The other one, the second major development is what we've seen in Asia and Europe is this substitution among energy resources that we never have seen before. So we ended up with the Chinese government, for example, imposing certain environmental regulations. As a result, the um, uh, coal production declined, and then we have the floods. As a result, demand for natural gas increased, and demand for LNG increased. Gas prices increased, especially in the spot market, increased to record levels. And as a result of this increase, we've seen switching from natural gas to oil. The substitution among energy sources is amazing. And this is one of the characteristics of 2021. If you look at Europe, one day we don't have wind. What they did, they resorted to coal and natural gas. Prices of coal and natural gas went up. Some power companies went bankrupt. And all of a sudden we've seen switch, like in Sweden, they returned back to oil. In some countries, they returned back to coal. So that's another characteristic of the substitution among various energy sources. The last point
Is this why natural gas prices came down like they did from the peak, maybe a week or so before WTI peaked out?
Well, there are several reasons for that. One of the main reasons is the U.S. LNG exports. As you know, they sent a massive amount of LNG to Europe about 2 weeks ago. So that was the major impact there. But the third point is the most interesting point in my view. It is about shale, and it's not about the inability of shale producers to increase production substantially with higher prices. It is really the hedging that is the new phenomena that we are going to see forward. Because what we are going to see, if we have time, I can discuss the 2022 outlook. If we are going to show is we are going to be range bound in 2022, but we are going to see within that range bound some severe fluctuations as we've seen in 2021 over one day. Like one day, all of a sudden you have this massive drop, like $10 in oil prices. That's because of the hedging, because of delta hedging, and sometimes delta gamma hedging too. So
it's happening everywhere. It's happening in every space. It's happening in equities. And now you're getting the gamma theta in oil too in us.
Well, in two, it's bigger. And the reason why, because before shale, we did not have it. With shale producers in the picture, what they are, especially the medium-sized and the smaller ones, they have to hedge for various financial reasons. And when they do the hedging in various ways, whether options or any other choice, basically, and prices drop below that level, we know the other side is going to react to that. And the reaction is going to be just selling more contracts, and prices will drop, and then it's going to hit another mark, and that's going to continue throughout the day. So that's another phenomenon we've seen in 2021 that's going to continue with us. So I think these are the three major events in 2021 that is shaping the future for the oil market.
Okay. All right. And you were pretty accurate on average price and the $78 level. Attendees are putting it up there. So people remember what you say in us.
Thank you. Thank you. On 2022, in general, this is kind of a big issue when we talk about averages. I really don't like to talk about averages, but people always ask about averages. As you know, if we talk about what the average price for 2022.
You don't have to talk averages here with us.
Correct. But I'm talking about the audience. I'm talking about social media. I'm talking about general events, conferences.
You're with a bunch of professionals here. So,
correct. Correct.
We don't care about averages. You can't trade an average, can you?
Correct. No.
All
no.
right. Okay.
No. Generally speaking, 2022 is going to be tighter than forecasts. And this is especially important because OPEC forecast until last week was a loose market with major surplus. Now they changed their view.
How can they do that in a week?
Well, it's not about a week. People have to realize, and I think if they take just this point from us today, from this meeting, this is very important. OPEC manages the market not only through outputs. OPEC also manages the market through information.
Okay. Yeah, so they can get they sway the way people position themselves in the market by their jawboning.
Correct. So like they are Fed. Not really.
They're like the Fed of the oil market.
Yes, in a sense.
Okay.
Although I
like that.
I wrote an article a long time ago that OPEC is not the Fed and what are the differences.
Really?
But I had to kind of keep it down on this front.
Okay.
So
I don't have to be careful. It's our show. We have freedom, at least for a while longer, to say whatever we want.
I do the same. It just sometimes you have to keep you have to keep your connections.
Yeah, and unless I want to just keep it, keep it a secret and not share it. You know what I mean? But sure. I know you wanted to talk about 2022, but here's, I think, a quandary a lot of people have right now. They're the technicians and they're fundamentalists. And, as you know, I was tweeting you when it was up here, and I just felt it was done and we were going to have some type of correction, not a big bear market call or anything. And, I'm just a neophyte. And, before Biden announced it, I thought that he would do something, foolish, silly, and release the SPR. But now, technicians, there's kind of a battle going on. Like a technician would say, Anas, this is probably a failing rally, that this could be a great shorting opportunity. But I could also see the case that we could blow to new highs in here too. So, when a market's in a position like this, it's for me an IDK. I don't know. Do you have a bias as to whether or not there could be another wave down, or are you more in the camp that we're just going to grind up to higher prices?
I am of the camp of a range bound prices unless we have that delta hedging going on and it will last only for a day.
Okay.
But the issue here is this, and I need to clarify this because some people on Twitter were a little bit upset on this. We have forecasts, we have scenarios, and we have the sweet spot that I talk about, and that's a pinned tweet on my account. These are completely three different things. Forecast, when I say I predict oil prices to go to $95, this, that's a forecast. But if I say something like, if Saudi Arabia does not increase production and Russia does this, and then they do this, then oil prices will go to 100, that's not a forecast. That is a scenario.
Yeah, it's a narrative.
Correct. And the third one is the sweet spot. The sweet spot basically is just a description of what is the best choice for oil producers and oil consumers. So the sweet spot is not a prediction. But since I posted that, it is very clear right now that the sweet spot, which is between $68 and $75 for Brent, is becoming kind of a center of gravity. Every time we deviate from that, we go back to it. So that's the only connection related to the market about the sweet spot that is becoming a center of gravity. And in addition to other information and other modeling, it is clear that there will be range bound in this case in 2022.
Okay. So before we went on today, you sent me some of the things you wanted to talk about, and I think that people are going to be pretty interested because, I mean, look at what Tesla's doing today, and all the EV stocks that have been, you know, speculative moonshots. You know, a lot of people buying into the argument that, you know, oil is becoming a thing of the past, and EVs are going to come here and, you know, have a big slash of demand for gasoline because of EVs. And you've got an example of where that's not exactly the case. Correct?
Yes, yes.
Yeah. So did you want to go there now and talk about that? Norway?
Yes. Sorry, because I've been my phone is kind of ringing off the hook because of that OPEC meeting going on right now.
Oh, okay.
And it just ended.
Tell them you're talking to Dale Pinkert.
Well, if they listen to me, it's most of the time it's a one-way street.
Yeah. Okay. So do you want to talk about
so
that?
In Norway, basically, this is kind of very interesting phenomenon because those who are pro EV and what I call the prophets of climate change. We talk about prophets of climate change. We are really talking about the extremists here. I mean, all of us are really, we want a cleaner air, cleaner water. All of us want that, but we don't want to go to the extreme for a simple reason, because we need a balance between energy security and environmental security. If you sacrifice energy security at the altar of climate change, you are losing both. You are not going to get environmental security. You're not going to get the energy security in this case. So the whole issue here is this, that they brag about Norway. The problem with bragging about Norway selling basically in the last month, I think 91% of car sales were electric in Norway. And they brag about it as an example. Well, it cannot be an example because Norway is one of the richest countries in the world. They have the money. And also they have one of the highest taxes too. But the point here is this. With this massive increase in EVs, you expect a decline in oil demand. You expect a major decline in gasoline consumption. You expect a major decline in diesel sales, especially that more than 55% of cars on the road in Norway historically run on diesel. And diesel car sales in the last 10 years have been increasing. You look at the data for November, diesel consumption went up.
Yeah.
So how in hell this happened with all those EVs? And not only went up by 7%, which is massive by any standard. Now you say, well, this is year over year because of Corona. Well, even month over month, we've seen an increase. Although they have a footnote, and the footnote says you cannot compare the data after 2020, before 2020, because they did some statistical changes. You look at gasoline, which has no statistical changes. The decline year over year is only 5.2%. So how you have massive increase in car sales where you have 90%, 91% of car sales are electric, and gasoline consumption declines only by 5.2%.
Because they're keeping two cars, the combustible.
Absolutely. So what they are doing
for
is
distance, because
not only two cars.
Range. Yeah.
For long distances, they are still using their diesel cars.
Right.
So there is a big lesson. You want to brag about Norway? Let's brag about it and talk about reality on the ground. So to conclude from Norway that all demand from transportation is going to be erased completely, a complete nonsense.
Yeah. Yeah, people, the battery ranges are still part of it, and it takes time for people to let go of something that, you know, they've
I
been
can tell
using.
you one thing. If
What?
the government of Norway stops selling oil, so they will not have enough money to subsidize electric vehicles,
Oh, yeah,
sales of electric vehicles will decline by 90%.
yeah, yes. That's their piggy bank.
Absolutely.
So they want to be green, but they're a major oil producer.
Sure.
So there's so many contradictions out there now. So it's kind of like the elephant in the room, and I don't know if you have a feeling about it, but I've heard, and I know that Joe and Vladimir are talking on the telephone and writing letters to each other, and their diplomats are gonna meet. But I've read that by the end of January that um, Putin will have 180,000 troops there on the border, and you don't move those kind of troops unless you're going to use them or you're playing a game. What would happen to the oil market if he invades Ukraine?
I mean, generally speaking, as you know, you guys are traders, people are going to panic and we will see some increase in paper barrels, money, and prices.
It
But
wouldn't be
not
long lasting. It would just be like a news event, last for a day or a week.
correct, correct. And basically it's not going to be more than that. But the issue here is this. The issue is if they are going to impose sanctions, what type of sanctions they are going to impose, and whether that's going to affect natural gas exports to Europe, whether they're going to
Yeah.
affect oil exports to China. I think it's the ramification of it, not the event itself. It's what type of sanctions they are going to impose, and whether
Okay.
they are going to exempt natural gas to Europe, for
Because he
example, or
has
not.
leverage. He has leverage on the Europeans to heat them for heat the rest of the winter.
Big time, big time. In fact, this is not only even on China right now. I mean, we have a problem with one um, pumping station on the Chinese border, on Russia on the Chinese border, that lowered gas exports, natural gas exports to China, and that caused a major problem in China. So even in China, he has a leverage.
Okay. So 2022, um, any big event or surprise or anything that
Well,
you're
two
looking
things
for?
on 22.
The trend remain basically positive because of shortage. Supply isn't as large as people think.
Let me say it in 3 points, basically. The first one is now the oil producing countries have money because of higher prices. That's going to stimulate their economies and that's going to increase their oil demand. So the oil exporters are going to have higher oil demand, which means that it's going to put pressure on exports. That's number one. Number two, we are going to see basically kind of support for high prices, but I don't see yet $100. I know this is going to anger some people, but there is no support for $100 so far for 2022. Any talk of $100 oil or higher, it has to be 2023 and after because of the lower investment thesis and all the other factors.
Okay. All right. And we're having one question. If you could just
Sure.
cover it quickly. Thoughts on carbon credits?
I am really not the best person to talk about
Okay.
this here. It needs kind of an expert on this one. Just one general comment on ESG, carbon, and carbon neutrality, that we are looking. I am studying the behavior of companies and countries, and I can tell you it's another Enron.
It's another what?
Enron.
Oh, I remember him. Okay. Yeah, just say what you think, Anas. All right. Don't pull any punches here.
All right,
So,
but
all right.
I mean, generally speaking, I mean, when you see people literally this accounting, the carbon accounting game is going to be the largest scam we are going to see in the coming years.
Okay. All right. You've heard it from Anas Alhajji. my trading warrior brother, someone that when you want to know about the oil market, you use as a resource. And you can find Anas on Twitter at Anas Alhajji, and anywhere else. They
The
can go see
website
your
with the
work.
same name,
Yeah. Okay.
ANASALHAJJI.com.
Okay. And
And
go
for
ahead.
the audience, basically, because I post in Arabic some really interesting materials and forward from others, they can just press the translate button. Twitter has a translate button, and the translation has improved substantially within the last year.
Thanks for going bilingual, Anas.
Thank you.
All right. So Anas Alhajji, thank you for your time. Great way to start the year off with your views on oil. We appreciate you sharing your
You're welcome.
hard
Have a great
work
day.
with us, buddy. All right.
Bye-bye.
All right, that's a wrap, everyone. So this was Tuesday. I'll see you for turnaround Wednesday, and you could join the crew. Oh, I'm glad you enjoyed it, Rick.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.